Good morning, good afternoon, and good evening, students. We have already dealt with regard to first part of clubbing of income section. Now we will be heading to our part 2, which will also be the final part with regard to clubbing of income lesson. In this lesson, we will be learning some parts with regard to section 64 clause 1 clause 8 and cross transfers. Along with that, we will be learning clubbing with regard to minus income as well. It might be one of the very important questions. Along with that, we will be learning section 32. Okay, make sure before looking into this video, make sure you complete part 1 and then only come to watch this. Yes, we will be proceeding as of now. Yes, so first let's go on to look at with regard to section 64 clause 1 clause 8. Okay, this is same with regard to question number 5 in our PDF, whichever I have shared in our YouTube. Okay, make sure I will be only explaining some of the concepts. Make sure you go and look through the question by yourself. Okay, let's look into what section 64 clause 1 clause 8 specifies. Okay, let's take one example, simple that here Mrs. A. Okay, transfers asset, that is nothing but other than house property. It may be an immovable property as well. Immovable property meaning land, building, or any of the both. Okay, she transfers her house property to XYZ Company Limited. Okay, only on a condition that whatever rental income that will be received by XYZ to Mrs. A will be for the benefit of her son's wife. Basically, whoever is Mrs. A's son, for her wife. In this case, is Mrs. C. Mr. C is her son, Mrs. C is son's wife. It will be for her benefit. Okay. She says that whatever income, rental income, will not be chargeable in her hands, but it is required to be charged in Mrs. C's hand. Why? Because rental income is for benefit of son's wife. In these cases, the intention is wrong. Why? Whatever the amount that will be received from XYZ Limited will be directly chargeable in the hands of Mrs. A, who is the original transfer. Okay, which will be directly taxable, not in the hands of Mrs. C. Okay, in the case of XYZ Limited, even section with regard to section 56 clause 2 clause 10 will also be attracted, which might be with regard to provisions with regard to movable as well as immovable property and money. Money meaning money exceeding rupees 50,000, movable property and immovable property. If it has been received without consideration, then it shall be, if fair market value exceeds 50,000, then it shall be taxable. If it has been received for inadequate consideration, then difference between FMV and difference between FMV and consideration will be taxable. In the case of immovable property, if stamp duty value exceeds 50,000, then it shall be taxable. Otherwise, difference between stamp duty value and consideration, if it exceeds 50,000 or 10% of the consideration, whichever is higher, will be taxable. A small introduction with regard to section 56 clause 2 clause 10. I hope everyone has learned with regard to income from other sources lesson. Okay, after this, one important topic is nothing but cross transfers. Okay, with regard to this section, make sure you refer question number 5. Okay, with regard to cross transfer, make sure you refer question number 9. Okay, I am just explaining the topics, that's it. Okay, cross transfer. Let's assume simple cases. There is Mr. A and Mr. A's brother. Okay, Mr. A has gifted rupees 5 lakhs to his brother's wife. Okay, in return, Mr. A's brother also gifted rupees 4 lakh to his wife, Mr. A's wife. Okay, both the gifted amounts has been invested in FD at 10% interest. In this case, Mr. A's brother gifted 4 lakhs. So on 4 lakh, 10% interest, that is nothing but 40,000. Mr. A gifted 5 lakhs basically to his brother's wife, on which FD interest will be 5 lakh into 10%, which is nothing but 50,000. In this case, since there has been transfer between the relatives itself, the amount that is liable for tax will be common. That is nothing but in both the cases, 4 lakh is common, okay? 4 lakh and 5 lakh. So whatever the lower amount, that is 4 lakh, is common. So amount that is required to be clubbed in the hands of Mr. A. Okay, it will not be taxable in the hands of Mrs. A's wife, but it shall be taxable in the hands of Mr. A. What amounting to rupees 40,000 only. Okay, clubbed in his hands. Okay, in this case also, even though interest has been received amounting to 50,000, only to the extent of 40,000 will be clubbed in Mr. A's brother's hand. Okay, only to the extent of rupees 40,000 only. Okay, balance 10,000, but balance 10,000 will be chargeable in her hands only, not in hands of A's brother. Okay, it's also one of the simple topics. Okay, make sure you just go through it. After listening to this example, make sure you once read question number 9 as well as question number 5. Okay, we will be moving further. So yesterday we had gone up to section 64, clause 1 plus 4. Okay, that is nothing but income arising to a spouse from asset transfer without adequate consideration. Today we will just go through some of the important provisions with regard to clubbing of income arising to a son's wife, whatever we have learned. Okay, we will just go through it. Where asset has been transferred by an individual to his or her son's wife. Basically, if any asset has been transferred by the parent to his or her son's wife, it is how it will be taxable. Basically, if it has been received without consideration, income from such asset will be included in the income of the transferor. If it has been transferred without consideration, basically if it has been transferred at fair market value, or cash has not been received, only if it has been used as a gift or something like that, it will be taxable in the hands of the transferor. In this case, transfer is nothing but son's wife. Okay, son's wife is the transferee. Who are the transferor? Basically her in-laws. Whatever income that will be generated will be taxable in the in-laws hands only. Okay, if they are invested by son's wife in his or her business, proportionate income arising from such investment is to be included in the total income of the transferor. Transferor is nothing but in-laws. If investment is in the nature of contribution of capital, the proportionate interest receivable from the firm shall be clubbed in the income of the transferor. That is nothing but in-laws. Yesterday's question, whatever we have learned, basically proportionate value of interest, like capital contribution as on first April, whatever amount that has been contributed by the son, basically in that case it was husband or wife. In this case it will be in-laws. Same, whatever steps we have followed over there, we are required to continue with the same. Okay, whatever the amount of capital contribution, that is as on 1st April 2025, whatever amount of profit that has been received, it shall be proportionated on that basis only, on the basis of capital, that is as on 1st April 2025. Okay. Next, all income from asset transferred without adequate consideration to person or associate of person by an individual will be included in the total income of the individual to the extent that income is used by the transferee for immediate or deferred benefit of transferee son's wife. Whatever I have learned over here, this is nothing but 64 plus 1 plus 8. Whatever the example we have done. Okay, it's the same provision. Okay, next, I have given a small note. Where any asset has been transferred by a person to any other person without consideration or for inadequate consideration, provision of section 56 clause 2 clause 10 will be attracted in the hands of the transferee if conditions specified therein are satisfied. In that case, whatever examples I have taken, it is with regard to XYZ company limited. Basically, provisions amounting of section 56 clause 2 clause 10 with regard to immovable property will be attracted. Okay. Next is very important, that is section 64 clause 1A, which is nothing but clubbing in the hands of minor's income. How it will be clubbed? Okay, let's take it simple. Easy points. First, minor's income will be clubbed in the hands of the parent whose income is higher, excluding minor's income. Okay, first point is that only. Income of minor shall be clubbed in the income of that parent whose total income excluding minor's income is higher. Okay, income derived from the minor from users with skill or talent or any other specialized knowledge or experience shall be taxable in the hands of the minor only. Okay, if any income which has been generated by the minor, like let's say by way of singing or dancing, it is through his or her skill. So whatever winning amount has been generated, it shall be taxable in the hands of the minor and not in the hands of the parent. Okay. Next, once clubbing of minor's income is done with that of one parent, it will be continued to be clubbed with that parent only in the subsequent years. It can be clubbed in the hands of other parent if assessing officer is satisfied that it is necessary to do so. Let's say for previous year 2024-25, whatever income has been earned by the minor has been taxable in the hands of the father, his or her father, not in the hands of mother. In next year also it will be clubbed in the hands of the father until and unless assessing officer steps in. If assessing officer is satisfied that it instead of the father it is required to be clubbed in the hands of the in the hands of the mother, only then it will be clubbed in the hands of the mother. If assessing officer does not step in, whatever process we have followed with regard to previous year 2024-25, same will be continued in previous year 2025 and 26 as well. That is, minor's income will be taxable in the hands of the father only. Okay, only on this assumption that in previous year 24-25, father's income was higher than that of the mother. Okay. If marriage of parent doesn't exist, basically parents are not together, minor's income shall be included in the income of the parent who maintains the minor child. If the marriage doesn't exist, okay, income of minor shall be included in the hands of the parent with whom minor child stays. Okay. Next, income of minor suffering from disability. If any minor is suffering from disability, as stated under section 80U, any income earned from him or her shall be taxable in his or her hands, not in the hands of the parent. Okay, if there is any disability. Next, exemption under section 10 clause 32 available to the extent of 1,500 with regard to minor's income. Whatever income that has been clubbed in the hands of the parent with regard to minor's income shall be liable for exemption under section 10 clause 32 to an extent of rupees 1,500 only. This exemption will be available only if he shifts out of section 115 BAC, that is default tax regime. Basically, parent opt for old tax regime, only exemption of 1,500 will be available. In the case of default tax regime, exemption not available. Next, income arising from house property. In the case of minor child, if any income has been arised from house property, not being a minor doctor, it shall be taxable in the hands of the transferor parent. Basically, who is the owner? Basically, owner of the house property. It shall be taxable in his or her hand only, not in the hands of the minor. Basically, rental income. Okay. Clubbing provisions not attracted in the case of natural law and affection. Okay, if there is any natural law and affection, clubbing provisions will not be attracted. Last point is a bit important. A special exemption under section 32 is not available to minor married daughter. What does it say? If there is a minor married daughter who has already been married, whatever income she has earned, okay, not by her skill or talent, basically any other thing like FD interest or something, it will be taxable in the hands of the parent. But exemption under section 10 clause 32 will not be available to that parent. Okay. So let's take one simple example. Okay. Let's take Mr. A has a salary of rupees 5,50,000. Okay. Mrs. A has a salary of rupees 3,50,000. Okay. Then Mr. B, who is son of Mr. and Mrs. A, has earned rupees 50,000 from winning in a singing competition. Okay. This one. Then let's take that Mr. C is also there, who is nothing but daughter of Mr. and Mrs. A. Okay. From essay writing competition. From essay writing competition. Let's take that Mrs. disability. Okay. Let's take that Mr. C has also got a gift from his father, that is Mr. A, amounting to rupees 1 lakh. Mr. C invested it in FD and received interest. Amounting to rupees, let's say 8,000. Okay. Compute gross total income of Mr. A and Mrs. A as per the clubbing provisions. Okay. Let's go through from the point number 1. Minus income will be taxable in the hands of the parent whose total income excluding minus income is higher. In this case, what is the total? Basically, salary is 5,50,000 of Mr. A and Mrs. A is 3,50,000. Obviously, Mr. A's income is higher. So, whatever income that has been generated from the minor, son or daughter, will be taxable in the hands of Mr. A, not in the hands of Mrs. A. Okay. So, obviously, first computation of gross total income of Mr. A for assessment year 2026-27. This is nothing but particulars and amounting rupees. Okay, so first let's start with salary. What is the amount of salary? 5,50,000 less standard deduction under section 16. Let's assume that he has opted for default tax regime only. Okay, that is 75,000. Obviously, net amount would amount to 4,75,000 in the given case. Obviously, Mrs. A's salary shall be taxable in her hand only. Okay, Mr. B, son of Mr. and Mrs. A, has earned 50,000 from winning in a singing competition. Okay. Basically, whatever this amount, basically 50,000 I am saying, it shall be taxable in the hands of the minor only. Okay. Basically, it is taxable in hands of Mr. B. It shall be taxable in the hands of Mr. B only. Why? Because he has earned this 50,000 from winning in a singing competition. That is by making use of his skill. Okay, skill or any other experience. Okay, so it is taxable in his hand only, not in the hands of the parent. Next, Miss C earned, basically daughter, earned rupees 1 lakh from essay writing competition. Even she is suffering from disability. In this case also section 80 is attracted. If minor's income who is suffering from any disability, it shall also be taxable in their own hands. Basically, it shall be taxable in the hands of Mrs. C. Next, last, Mr. P has also got a gift. He got a gift from his father amounting to rupees 1 lakh. It is not by way of use of any skill or talent or any other experience. He invested it in FD and received a interest income amounting to rupees 8,000. In this case, whatever the amount of interest has been received shall be taxable in the hands of the parent. That is nothing but Mr. A. Why? Because this interest, whatever has been earned, is not by way of skill or talent, which Mr. B possesses. So whatever income has been earned will be taxable in the hands of the Mr. A. So FD interest received, that is nothing but 8,000. Okay, this is obviously under that the income from other sources minus exemption under section 10 clause 32. That is nothing but 1500. In this case 1500 exemption is not available. Why? Because he has shifted out of default tax regime. Okay, only for this condition, let's take that. Let's just add it. He has shifted out of default tax regime. That is nothing but he has shifted out of 150 BAC. So obviously here the standard deduction would amount to 50,000. So 5 lakh will be taxable. If he has opted for default tax regime, that is 115 BAC, this limit would have been 75,000. Here exemption will not be available. By exemption of rupees 1,500 will be available only if you opt for old tax regime. Okay, so obviously it is 1,500, which is nothing but 6,500. So 5,06,500 is the gross total income in the hands of Mr. A. Okay, next computation of gross total income in the hands of Mrs. A. This is nothing but she only has salary and nothing else. So salary, that is 3,50,000 minus, let's take same he has shifted out of, less standard deduction under section 16, that is negative 50,000. So only 3 lakh is the gross total income. Okay, next obviously we are left with Mr. B and Mr. C. Okay, computation of gross total income of Mr. B or who is Mr. B? He is basically the son. So obviously what he has done, basically Mr. B has earned rupees 50,000 from winning in the singing competition. So prize money from singing, that is nothing but 50,000. Okay, even this will be taxable under income from other sources only. Okay, prize money from singing 50,000. Why it will be taxable in the hands of Mr. B? Basically, whatever the amount that has been earned from singing competition is by way of his skill and experience. Since Mr. B has earned it from his skill or experience or knowledge, it will not be left in the hands of the parent. Okay, make sure here exemption under section 10 plus 32 will not be available. Exemption under section 10 plus 32 only if available if minor's income is taxable in the hands of the parent. In this case, here obviously it is minor income, so no exemption under section 10 plus 32. Okay, so only gross total income is nothing but 50,000 in this case. Okay, next, last is nothing but Mrs. C is left. So what, Mrs. C has earned 1 lakh from SI rating competition and she is suffering from disability. Prize money from, let's say, rating competition, that is nothing but rupees 1 lakhs. Okay, why it will be taxable? Same, whatever the reason I have given here. In this case, since Miss C has earned the income from his skill or from his or her skill or experience or knowledge, it will not be taxable in the hands of the parent. It's the same reason. Whatever I am writing over here is the same reason over here, as is 1 lakh. Okay, obviously exemption under section 10 plus 32 will not be available. Last sentence we have already taken into consideration. This is how we will be computing the minor income. Make sure we write a note of each and everything. Okay. Yes. Make sure you copy it once, pause it, make sure you attempt it on your own. Then on that basis only you can try. Yes. Next we will be going through sums. So we are done with question number 4. Question number 5 was with regard to section 64 plus 1 plus 8, which I have already stated in that example. Make sure you understand the example, then just go through the question once. Along with that, question number 9 is also been done, which is with regard to cross transfer only. Make sure you understand the example very well and then attempt that question on your own. Make sure there has been lot of things stated in that answer. Make sure you need not write it so much with regard to exam preparation. Make sure you write some of the points which are very important. Okay. Next, question number 6. Okay. Question number 6 is obviously a bit easy. Okay. Obviously in this part we are writing the answer, in that part we are writing the notes. Okay. Basically Mr. Sharma has 4 minor children, that is 2 daughters and 2 sons. The annual income of 2 daughters is rupees 9,000 and rupees 4,500 respectively, and of sons is 6,200 and 4,300 respectively. The daughter, who has an income of 4,500, was suffering from a disability specified under section 80U. Compute amount income earned by minor child to be clubbed in the hands of Mr. Sharma, assuming that he has exercised the option of shifting out of default tax regime under section 115 BAC. Okay. Make sure that exemption under section 10 clause 32 of rupees 1,500 shall only be available if he has opted out. In this case, he has opted out of default tax regime, so exemption under section 1,500 will be available. That exemption of 1,500 is per child, not in total. Okay, so obviously here there are 4 children, so exemption of 1,500 each will be available on individual child. We are required to compute computation of amount of income to be clubbed. Computation of income to be clubbed. In the hands of Mr. Sharma. So obviously particulars, then amounting rupees. Obviously there are 2 daughters and 2 sons, all are minor. Okay, annual income of 2 daughters were 9,000 and 4,500, and they have also stated that daughter who is earning 4,500 is suffering from disability. Yes, so obviously income of one daughter will be taxable in the hands of Mr. Sharma only. So income from one daughter, that is 9,500. Yes, in this case less exemption under section 10 plus 32, that is nothing but, sorry, it is 9,000. Okay, that is nothing but 7,500. Yes, with regard to other daughter, that is nothing but note. What daughter who is earning, basically what is the amount, that is 4,500 I believe. Yes, daughter who is earning 4,500 is suffering from disability. If any daughter or a son is suffering from disability as stated under section 80U, whatever income that he or she is earning will be taxable in his or her hands only, not in the hands of the parent. Okay, so we are obviously writing one note. First, minor child suffering from disability as stated under section 80U and any income earned through the minor child, any income earned through the minor child shall be taxable in the hands of minor child only. Okay. Therefore, in the given case, rupees 4,500 earned from daughter suffering from disability as stated in section 80 shall be taxable in her hands only, not in the hands of Mr. Shankar. Okay. Next, what is the amount of income that has been earned from the sons? That is nothing but one son has, basically one son is earning 6,200 and another son is earning 4,500. Basically income from minor son, that is nothing but 6,200 plus 4,300, that is nothing but 10,500 less less this exemption under section 10 clause 32, that is nothing but 3,000. So net amount would amount to 7,500. So total is 15,000 income to be clubbed. Obviously, we can get one more note that exemption under section 10 clause 32 is available amounting to rupees 1,500 per child. Next one more thing, exemption under section 10 clause 32 is available only if SSC shifts out of default tax regime. That is nothing but our 150 BA. Okay. This is the income. I hope it was easy. Yes. Okay. Make sure you go through it once. It is compulsory to require. It is compulsory. Make sure you are reading notes. If this question comes for 5 marks and if you are not reading the notes, you will be getting n around 2.5 marks. That's it. Only because you are not written the notes. If you are not reading the notes, notes are very compulsory. Make sure with regard to any of the points, whatever you know with regard to notes, make sure you write it once. Okay. This was our question number 6. Okay. Next. Okay. Okay. During the previous year 2025-26, following transactions have been offered in respect of Mr. A. Okay, Mr. A had a fixed deposit amounting to rupees 5 lakhs in Bank of India. He instructed bank to credit the interest of deposit at the rate of 9% on from 1st April 2025 to 31st March 2026 to savings bank of Mr. B's son. Mr. B, son of his brother, to help him in his education. Basically 5 lakh into 9%. So whatever the amount of interest that has been received has been transferred to Mr. B, who is nothing but Mr. B's son. Mr. B is obviously the brother of Mr. A, to his son. It has been transferred. Okay. Next. Mr. A holds 75% of the profit in partnership firm. Mrs. A receives a commission of rupees 25,000 from the promoting the sales of the firm. Mrs. A possesses no technical or professional education. I hope you are understanding what this point is saying. Okay, obviously it is talking about substantial interest and stuffs. Okay, and since she doesn't own any professional or technical knowledge, whatever income that has been earned to her shall be taxable in the hands of her husband only. Why? Because he has a substantial interest. It is 75%, which is nothing but more than 20%. Okay, next. Mr. A gifted flat to Mr. Mrs. A on 1st April 2025. During the previous year 25-26, A's income from house property, basically computed devastated, is 52,000 from such flat. So obviously there is a transfer, basically transfer from Mr. A to Mrs. A, basically only as a gift. Okay, in yesterday's question obviously they have stated that she had owned the house property, so whatever income she had earned would have been taxable in her hands only. In this case she has not owned the house property, basically she has received the house property as a gift from her husband. So whatever income that has been earned from the house property shall be taxable in the hands of Mr. A only, not in the hands of Mrs. A. Okay, next. Mr. A gifted 2 lakh to his minor son, who invested the same in his business and derived income of 20% from his investment. I will make sure I explain this point nicely one more time. Okay, next. Mr. A's minor son derived an income of 20,000 through business activity involving application of his skills and talent. That is nothing but amounting to rupees 20,000. Okay. During the year, Mr. A got a monthly pension of rupees 10,000. He had also other income. He has no other income. Mrs. A received a salary of 20,000 per month from a part-time job. Examine the tax implications of each transaction and compute total income of Mr. and Mrs. A and their minor child, assuming that they have exercised the option of shifting out of default tax regime under section 115 BAC clause 1. Okay. So obviously there are 3 parties in this case. So obviously we are required to compute income with regard to Mr. A, Mrs. A and his son. Mr. is okay. This is nothing but our question number 7. So what are we required to compute? Computation of total income of Mr. A. They are shifted out of default tax regime. Particulars. Okay. Then we are writing Mr. A, then we are writing Mrs. A. Then obviously next is nothing but son of Mr. A. Here we will be writing the notes. Okay, so first make sure whenever you are writing the question, make sure you write it in a certain format. Like make sure whatever the income from salary, it has been presented first. Income from house property second, PGBP income, capital gains, then other sources. Obviously ultimately you will get to gross total income. Okay, so first nothing but income from salary. Okay, make sure where the points are. Okay, income from salary is obviously our last but one point after E. During the year, Mr. A got a monthly pension of 10,000. He had no other income. Mrs. A had received 20,000 per month as a stipend. Okay, Mr. A and they assuming that they have exercised the option of shifting out of default tax agreement provided under this section. Okay, if anyone wants, they can try it on their own. But yes, if you can't, make sure you watch the sum once because this is one of the very good questions. Yeah, you make sure you watch it once. Then yes, you can pause it and do it on your own. Then make sure you continue the video once again. So obviously first income from salary. So what Mr. A has received? He has received a pension of 10,000 per month. That is nothing but 10,000 per month into 12. That is nothing but 1,20,000. Okay. Mrs. A had received a salary. That is 20,000 per month. 20,000 per month into 12. That is nothing but 2,40,000 less standard deduction under section 16. That is nothing but, since they have shifted out of default tax regime, the amount of deduction is 50,000 in each of the cases. So obviously the amount would be 70,000, and in this case it is 1,90,000. Okay, here there is nothing. Obviously it is nil. Okay, so obviously it is our net salary. We will state it as A. Next. Okay, now let's start from point number 1. Okay, Mr. A had a fixed deposit of rupees 5 lakhs in the Bank of India. He instructed the bank to credit interest of fixed deposit at the rate of 9% per annum on 1/4/2025 to 31st March 2026 to the savings bank of Mr. B's son, of his daughter, of his brother, to help him in his education. So obviously whatever the amount of interest, that is nothing but FD 5 lakhs. Obviously at the rate of 9% they have stated. Only the interest amount has been transferred to Mr. B, that is nothing but Mr. B's son, basically brother of Mr. A, not the asset. So obviously since asset has not been transferred, whatever the income that has been earned will be taxable in the hands of Mr. A only. Okay, so obviously first all this will be taxable under income from house property, if any. There is a point with regard to income from house property. Next we will be learning with regard to income from other sources. Okay, so they have stated that as Mr. A had a fixed deposit, he instructed the bank to give FD interest from Bank of India. Okay, which is nothing but, obviously it is 5 lakhs into 9%, which is nothing but 45,000. Since Mr. A has only gifted it to his brother's son, it will be taxable in his hands only. Basically we can state it as note number 1. Okay, so obviously it is note 1, notes we can read, then we can state it. Obviously it is question number 1 in note. Okay, since only income has been transferred, and asset has not been transferred, income arising from the asset will be taxable in the hands of the transfer. Therefore In the given case, FD interest received to Mr. B son, who is nothing but brother's son, shall be taxable in the hands of Mr. A only, who is nothing but transferor. Okay, the same question we had dealt yesterday also. Basically, it was nothing but go down has been transferred. We can go to the example. In first only in the clubbing of income, I have stated an example that basically warehouse has not been transferred, but rent of warehouse has been given to the son. So since asset has not been transferred, only income has been transferred. Whatever the income that has been arised from the asset shall be taxable in the hands of the transferor. In this case also, only income has been transferred, but FD interest has been transferred. FD has not been transferred. So whatever income that has been generated will be taxable in the hands of the transferor only. Basically, in whose name FD is there, that is A. So 45,000. Okay. Next, in this case, obviously exemption under section 10 clause 2 is not available. Why? Because whatever the amount of FD interest has been received has been given to brother's son, not his son. Only if it is his son only, he will get an exemption of rupees 1,500 under section 10 clause 32. Okay. Next, Mr. A holds 75% profit share in partnership firm. Mrs. A received a commission of 25,000 from the firm for promoting sales of the firm. Mrs. A possesses no technical or professional qualification. It is easy point. Yes. Obviously, it is point number 1. Now it is point number 2. That is nothing but commission from firm to Mrs. A. That is nothing but amounting to rupees 25,000. Amounting to rupees 25,000. Okay. Obviously, we can state it as note number 2 in this case. Why note number 2? So, in this case, what it has stated, Mr. A has 75% profit share in that business. Obviously, Mr. A doesn't possess any technical or professional knowledge. So, whatever amount she has earned, that may be bonus, commission, or any of the salary, it shall be clubbed in the hands of her husband. Why? Because she doesn't possess any professional or technical knowledge. If she has possessed any professional or technical knowledge, it would have been taxable or clubbed in her hands only. In this case, she doesn't possess any professional or technical knowledge, so obviously it will be taxable in the hands of Mr. A. Okay, simple. Since Mr. A has a substantial interest that is 75% in this given case. Substantial interest is nothing but 20% or more of the voting power. In this case, it is 75%. And his wife, that is Mrs. A, does not possess any technical or commission received should be clubbed in the okay. So obviously it is 25,000 in this case. Next, okay, Mr. A gifted a flat to Mrs. A on 1st April. During the previous year, 2025-26, Mrs. A income from house property computed meaning nothing but already deduction under section 24, that is at the rate of 30%, and interest on capital has already been taken into account. After that, whatever the net income is coming, that is 52,000. If computed word has been given with regard to, if it is with regard to salary also, already deduction of this 50 or 75,000 has already been done. If it has given with regard to income property, deduction under section 24 has already been provided. So obviously it is a gift given by Mr. A to Mrs. A. So any amount of house property that has been received will be taxable in the hands of Mr. A only. Okay. So obviously income from house property. That is nothing but computed. You have already computed the income. That is nothing but 52,000 every. Yes. Just give a note on that. Since Mr. A has gifted the flat to Mrs. A and any income earned will be lumped hands of Mr. A only. Okay, so obviously it is 52,000. Okay, make sure you copy this. Okay, I will make sure I will erase it because I will still need bit of space. So obviously it is 70,000 and 1,000. So make sure in the house property over here, whatever the answer is coming here, make sure you write it as B. Okay, we are required to add all this. Okay, next portion. Obviously we are done till point number C. Next, Mr. A gifted 2 lakh to his minor son who invested the same in his business and derived an income of 20,000 from investment. Basically, whatever the amount, basically 20,000 has been gifted by Mr. A, okay, to his son, okay, amounting to 20,000. The amount of 20,000 has not been earned by way of his skill or talent. Basically, whatever amount that has been received to the son was already been gifted by his father. So whatever amount that has been generated from the investment shall be taxable in the hands of Mr. A only, not in the son's hand. Okay. So what is the amount of income? That is 20,000. Yes, 20,000. Okay. So it will be continued. Okay. Income received from investment. That is nothing but okay. Let's still wait notes and okay. It is minus income without his talent or skill. Okay, which will amount to 20,000. Make sure since it is minus income, exemption under section 10 clause 32 is available since it is clubbed in the hands of Mr. A only. So obviously it is 4th point. Okay, since okay, amount of rupees 20,000 from investment earned by son of Mr. A shall be clubbed in the hands of Mr. A since it has not been earned by way of his skill or experience or talent or knowledge. Okay, so obviously make sure you write note number 4 and here that is nothing but 20,000 minus 1,500, that is exemption, which will amount to 18,500 in this case. Next, Mr. A gifted, okay, that has already been done. Okay. Next, Mr. A's minus and derived an income of 20,000 through business activity involving application of his skill and talent. Okay. Income derived from Mr. A's son from skill and talent. That is nothing but amounting to 20,000. Yes. That is nothing but 20,000. Okay. Obviously, we can make it as note number 5. Okay. Income earned by the minor from skill or talent or experience shall be taxable in the hands of the minor only. Okay, so obviously it is 20,000 in this case. So I think rest all has been done. Yes, 80,000, 20,000, that's 45,000 and 25,000. Yes, make sure last should be written as gross total. Okay, you can write here whatever you get the answer over here. Make sure you write C. C is nothing but only income from other sources. So make sure you add this sum 1, 2, 3 and 4. All the things. So obviously it is 45,000 plus 25,000 plus 18,500, which should amount to 88,500. Here it is nil, here it is obviously 20,000. Make sure you add all the above things. That is nothing but A plus B plus C. Gross total income, that is nothing but A plus B plus C. In this case already there was 88,500 plus income from house property also was received amounting to 52,000 plus whatever the amount of salary. That is nothing but 70,000 I believe. So 70,000, which would amount to 2,10,500. Okay, in this case it was only 1,90,000 and in the final case it is 20,000. Obviously gross total income has been computed in this case. Okay, this question was very good. Okay, make sure you mark this question as LDR. LDR is nothing but last day revision. Obviously make sure before going to exam, make sure you keep a note on this question. Also you can provide a note with regard to exemption under section 32, that exemption under section 10 plus 32 will be available amounting to rupees 1,500 per child. Okay. Okay, question number 8, I think you can do it on your own. Question number 8, make sure you do it on your own. I will not be solving it. Question number 9 is with regard to cross transfers, which has already been done. Question number 8 is an homework for you. It is easy. Okay, make sure you attempt it on your own. Okay, next let's go to question number 10. Question number 10 also you can mark it as LDR. Okay, question number 10. Okay, here I don't think let's start. Nisha gifted rupees 10 lakh to his wife Nisha on her birthday, amounting to on her birthday on 1st January 2025. Nisha lent rupees 5 lakh out of the gifted amount to Krish as on 1st April 2025 for 6 months, on which she received an interest of 50,000. Let's make sure we make it a part on this. Okay, so obviously let's make sure what they are stating in the line. In whose hands above income and loss shall be included in the assessment here. Support your answer with the brief reasons. Obviously they are just stating that Just make sure you provide us the treatment. That's it. They are not telling us to compute gross total income. So obviously question number 10. Okay. Let's start with question number 10. First, Nisha gifted 10 lakhs, out of which 5 lakh was given as a gift amount to Krish for a 6 months on which she had received an interest. Okay. Obviously, amount of rupees 10 lakh was gifted by Nisha to Krish, but whatever the amount of 10 lakh was gifted to Nisha by her husband. Okay, so any income that has been received by her wife, that is Nisha, will be clubbed in the hands of Nishant only. That is nothing but amount of interest that has been received amounting to 50,000 shall be clubbed in the hands of Nishant, not in the hands of Nisha. Okay, since amount has been earned by way of gifts. Okay, accordingly 50,000 of amount of interest of loan. Okay, make sure you read it. Okay. Accordingly, first part. Accordingly, rupees 50,000 received as interest from Krish to Nisha. I think it's Nisha. To Nisha shall be taxable in the hands of Nisha. Reason what is the reason? Reason being, since rupees 5, basically 10 lakhs, since rupees 10 lakh, out of which 5 lakh was given as gift to Krish by Nisha only. Okay, so any income that has been generated from this income that has been generated will be taxable in the hands of Nishant only, not in the hands of Nisha. Okay, basically husband. Make sure you go through an explanation once. I was just writing it. Okay. Obviously this was this first part. Okay, let's go to second part. Okay. Next, the said amount of 50,000. Basically, the amount of 50,000. This rupees 50,000, whatever that has been earned, was invested in shares of a listed company on 1st October 2025, which was sold for rupees 75,000 on 30th December. Basically, whatever income that has been received from interest, basically only interest has been actually received to Nisha only. Or it will be clubbed in the hands of, basically clubbed or taxable in the hands of Nisha. But if the same income, if this rupees 50,000 has been reinvested, basically first it has been invested, next it has been reinvested. Whatever income generated, if it has been generated, it shall be taxable in the hands of Nisha, not in the hands of Nishan. Why? Because obviously whatever the amount of 50,000, it has already been reinvested. Basically, 5 lakh amount has been given as gift to Krish. Out of 5 lakh, 50,000 was received as interest. This interest will be taxable in the hands of Nishan. This 50,000 will be taxable in the hands of Nishan. Okay, same 50,000 has been reinvested in the shares by whom? By Nisha only. So any income that has been generated shall be taxable in the hands of Nisha only, not in the hands of Nishan. So obviously, what is the full value of consideration? Full value of consideration is nothing but 75,000. What is the cost of acquisition of the shares? That is 50,000. Since it has been sold within a period of 1 year, it is nothing but short-term capital gain. Since it is a short-term capital gain, it shall be liable for tax at the rate of 20%. It's as simple as this. Yes. Next, security transaction tax was also paid on such sale. Next, balance of gift was invested as capital by Nisha in a newly business. She suffered a loss of 15,000 in the business for financial year. Okay, in the given case, whatever the amount, okay, basically out of 5 lakhs, so total there was 10 lakhs. Okay, out of 10 lakh, 5 lakh was gifted to Christian. On 5 lakh, 50,000 interest was generated. So 50,000 interest, whatever was generated, was taxable or clubbed in the hands of Nishant only. And balance 5 lakh, whatever was generated, it was invested in business and it generated a loss of 15,000. So whatever loss, that is nothing but loss of 15,000 shall also be clubbed in the hands of Nishant only. Okay. So in simple, if I tell, so Nishant had gifted rupees 10 lakhs to Nisha. Yes. Out of this 10 lakh, 5 lakh was given as gift by Nisha to Krish. Yes. Out of this 5 lakh, 50,000 interest was received. Yes. This 50,000 shall be taxable in the hands of Nishant only. Okay. This 50,000 was reinvested again. If it reinvested and it generated a gain of 25,000, this 25,000 is nothing but short-term capital gain. It shall be taxable in the hands of Nisha only. Okay. This is a simple summary. And balance 5 lakh was invested in business by Nisha only. So it generated a loss of 15,000. So this 15,000 shall also be clubbed in the hands of Nishant only. So obviously then there is Nisha. So make sure you take the note of it. You can write a summary. Okay, at the end. Okay. I hope you can mark this question as this question is also very good. Okay. Next we are heading towards our final question. Let's go to our question number 11. Okay, question number 11. In this case, especially if you go through question number 11, I will do it in very short time. I will do it a bit rough. So obviously, this question is also easy. If you did the first question of topic of today, it is when compared to that, this question is easy. So obviously, it has stated that income of Mahadev from professional singer has been computed. Basically, income he has received, that is 5,65,000 from professional singing. So gross total income of Mahadev. So income from professional singing, they have stated, that is 5,65,000. Okay, it shall be taxable in his hands only. Next, salary income of Darya, that is, okay, Darya is his wife. So whatever income, that is 3,80,000. So they have stated gross total income of Darya, that is nothing but income from salary, that is computed meaning already standard deduction has been provided, or of 50,000 or 75,000. So net income is nothing but 3,80,000 in this case. So loan received from Darya from Ramu and Jay, where Darya holds 35% of the company. The company has incurred losses since its inception is 2 years, from 2 years back. Okay, obviously loan was received by Darya from the company only. Okay, where she holds 35%. Basically 35% is substantial interest. So any amount basically which has been received from the company itself to the employee, it shall be treated as deemed dividend as per section 2+22. So any amount of deemed dividend which has been received shall be taxable as accumulated profit only to the extent of the loan. Okay, as per section 2+22. So loan from Ramu and Hill to Daria. What can we read? It is treated as deemed dividend as per section 2 clause 22. Okay, make sure whatever the amount it is treated as deemed dividend, it shall be treated as dividend only to the extent of accumulated profits. Whatever the amount of accumulated profit that has been received, accumulated profit that has been received shall be to the extent of amount of loan. That is nothing but 2,50,000. Let's for this case, let's assume that company had made a profit of 1,50,000. Loan provided was 2,50,000. So whatever the amount that shall be treated as deemed dividend shall only amount to 1,50,000. That is nothing but amount of accumulated profits only. This in detail we have learned in income from other sources. Okay, in this case the amount that is chargeable is 0. Why? Because company has earned losses, not profit. Only if it has earned profit only, then concept of deemed dividend will come. Okay, only to the extent of accumulated profit. Here the company has earned losses from 2 years, so amount that is chargeable as dividend is nil. Okay, since the company has earned losses, there is no accumulated profits. That is nothing but nil. Okay, next, this point is important. Next, income of their minor son Golu from winning singing reality show from the TV. Basically, amount that has been received has been by minor from his skill and talent. Okay, Golu, obviously from his skill and talent. Yes. So any amount that has been earned from the minor, from his or her skill talent, shall be taxable in his hand only. Yes, taxable in the hands of Golu, not in his or her parents' hand. So obviously it is nil. Okay. Next, cash gift received by Golu from a friend of Mahadev on winning the show, that is 21,000. Cash gift received. Okay. In the given case, since cash gift received is less than 50,000 as per section 56 clause 2 clause 10, it shall be exempt. Okay, since it has been received from a friend. If it had been received from a relative also, this limit of 50,000 will never be applicable. As much ever amount if he received, it is exempt. But since it has been received from a friend, it has been received from friend, so till the extent of 50,000 is nil. So in this case, if 21,000 has been received, whole amount will be exempt from tax. Okay. Next, interest income received by minor married daughter Gudia from the deposits of Ramu. Basically, here there is an income of minor married daughter. Income from, this point is important. Income from minor married daughter. That is nothing but Gudia. Okay, whatever income has been earned has no, it is not by way of skill and talent. It is not by way of skill and talent. Okay, so whatever income that has been generated will be taxable in the hands of her parent only. That is nothing but 40,000. Okay, less exemption under section 10 clause 32. It is nil. Why? Exemption under section 10 clause 32 not available in the case of minor married daughter. So obviously the net income is also 40,000 only. Yes. So make sure you add it. So here the total income would amount to 6,05,000. Yes. And here the total income is 3,80,000. This is nothing but gross total income, and this is also gross total income. In this question, all points are easy, other than one is this point and another is this point. These 2 points are a bit tricky. Okay, rest all points are a bit easy. Just make sure you go through all the above questions once. It is actually one of the easiest lessons. Only 2 to 4 months or 6 months maximum it will come. Make sure you give a concentration on all the important topics that have been taught. Yes, thank you, and I am done for the day. Yes.